Hi, my name is Jeremy. I'm from Honolulu, Hawaii. I received funding on August 23rd, 2021. I completed the evaluation in 15 days, and I did the 50K evaluation. I chose this account because I felt that the drawdown was large enough that I could express my edge within the markets. And my approach to the markets can be kind of classified as a little bit of scalping and a little bit of market structure trades. I was drawn to OneUp Trader because the flexibility at which you were able to, with the rules and the drawdown levels and the goals, I felt the flexibility was enough that I could express my edge within the market, and the drawdown was large enough that I could get enough samples of trades in order for me to realize the edge in the markets. Yes, I would. In fact, I do recommend OneUp Trader to all of my trading friends and partners, because as new traders, a lot of times you don't have a properly funded account. A lot of times, even if you do have a funded account, you can blow through accounts really quickly. And so I think the idea of taking an evaluation and using the evaluation in order to test your edges, and eventually when you get into the funded account, using other people's money to express your edges and get a cut from that, I think is a really good idea, especially when you're starting to scale up your edges. Didn't really have any issues with OneUp Trader. Anytime I had questions though, they were resolved within the hour. The chat boxes on OneUpTrader.com were always responsive whenever I had to ask questions. After completing the signed documents and all of the kind of the legal paperwork, I received my login credentials about 48 hours after, so about 2 days. It was a smooth transition. Everything, it's just like trading any other account. No, I did not have any fees, and I did not pay for any data. When I was funded, I know that in the past, because this isn't my first account that I got funded with MES Capital and OneUp Trader, if you do break a rule, say you break like a scaling rule, as your dynamic scales, there were times that I did break that rule and they did give me another chance. Also the trailing drawdown, not trailing drawdown, but the daily loss, if you talk to MES Capital, they're pretty understanding with that too. So you do get warnings, and you don't just like blow up the whole account just because you broke one rule. So they're really good about that. I did. I did get funding at other companies, but I still hold OneUp as the best to try. I compare OneUp as the best, and I have gone to other places and I have got funded at other places, but I think OneUp is the best because the drawdown is the largest. So in terms of how much risk capital you can access for the amount of evaluation fee, they have the highest sort of risk to reward in terms of how much money you're going to spend and how much money that you're going to get back in terms of risk capital. Also, there's only one step for the evaluation, so you just have to pass that evaluation and then you get funded, unlike some other places where there's 2 steps, or however they run these things, and the rules are not so stringent where you have to be within these certain rules that kind of set you up for failure. The rules are basically just there in order for you to kind of practice your own risk management and give you your own parameters. Just like any other firm out there, they have to protect their risk, and so it really is there to protect you. I trade my entries and exits based on market structure, so based off of volume profile, highs, lows, value area highs, value area lows, volume point of controls. I also use order flow. I use a lot of kind of reading the tape. I look at delta. I look at retracement volume. I'm also looking at statistics. So I have a whole bunch of statistics that kind of tell me if we are opening in a certain area within the day, we have an X percentage of doing this and an X percentage of doing that. Based off of that, I use market structures to kind of figure out where we are within that auction, and then I use order flow to figure out where the participation is done and where it possibly is trying to go. So it's complicated. And then there's also I have risk or trade management strategies where I scale into positions and I scale out of positions depending on market volatility and depending on where my stop is and where my targets are. I use VWAP, I use open high low close data, I use volume profile, I use footprint charts, I use bookmap, I use an advanced dome, I use reconstructed time and sales, I use a whole bunch of things, and I also use statistics, and that's truly derived from different algorithms that you can kind of put together on Excel or R or MATLAB or whatever you want to use. It's just you use these different things because in the markets you want to put yourself in a structure. You want to be able to know when you wake up in the morning, you have a certain percentage of the market acting in a certain way, and once you know it's going to act in a certain way, your job is to figure out if it will act that way, and if it doesn't, what is the other behavior that will take place, and then after that, it's your job to exploit that behavior, otherwise known as an edge. Well, obviously, I want to withdraw everything. I want to make the most amount of money that I can, but we have to be realistic. I really just use these accounts to kind of test edges, right? I use them to test theories. I use them to test how my edges scale in terms of how many contracts can I put on before I get a negative risk to reward. And after that, then I worry about scaling it up. So essentially, I look at the process first. I'm focusing on the process of the trade first before I'm looking at how much money I'm trying to make. But if that's the case, well then let's withdraw $1 million. That probably be a good goal. My trading day starts with pre-market prep. I'm looking at, as we come into the New York Open, where are we? Are we within balance? Are we of the previous day? Are we within range of the previous day? What happened overnight? What news releases are coming out? Like, are we having a Fed release? Do we have FOMCs? Do we have chair speakers? Do we have earnings that are coming out for certain companies? Because those will influence the indices, because I trade NASDAQ and RTY and ES, and so the companies within those indexes will affect the price of the futures contract that you trade. Once I have that figured out, then I use statistics to kind of figure out what is the possibilities of what may happen today. I also use market structure to figure out where participation has been done, where participation may be heading to based on statistics, where we are, and what have we done. And after that, then it comes down to picking levels of interest or areas of interest, and then using order flow to validate or invalidate those levels to hit other areas of interest. Yes, I think it has, because it forces you because I trade the micro contract. So in terms of having 1/10 the risk on a micro contract, it forces you to use the contracts to your advantage, the amount of contracts that you can use to your advantage. Essentially, using a micro is 1/10 the size of a normal E-mini, which on a 50K evaluation gives you the relative capital of like $25,000 of capital that you would trade with the E-minis. And so I use that in order to kind of scale into my positions using 5 micro contracts and scaling them off one by one, or scaling them off by 20% increments, or scaling them off by going half or half in, half out, and then scaling into these levels. And that happens because in the evaluations and in the funded account, they limit you to a certain amount of contracts. So that forces you to be more accurate with your entries and exits. And it forces you not to just take YOLO trades, quote unquote, or just kind of like bet the farm on it's going to go up, or bet the farm that it's going to go down. And so it helps you to organize not only your trades, but organize your trading as a business and as a trading plan, because you know you only have a certain amount of capital to work with, just like any other business. You only have a certain amount of working capital, and you have to make your business fit that risk profile. And that's what OneUp Trader forces you to do because of the guidelines that you have to set. And it's really a benefit to traders, especially when you first start out, because let's be honest, when you first start, you don't know what the hell you're doing. Learn first, I think, first and foremost. If you don't really have an edge, or you don't really understand how the markets work or how they move or why they move, you probably shouldn't be in an evaluation. But if you don't really care about that, then go for it, because just keep on putting up bets and keep on gambling. Because if you really think about it, you're gonna spend $160 for an evaluation fee, and if you win, then you're gonna get $2,500 basically to trade with. So that's beyond a 10 to 1 risk to reward. You can't really get that in Vegas. You can't really get that in the casino. So yeah, it works out for you. Even if you don't have an edge, you can still do it. But the best advice I can give anyone who wants to pass these evaluations is really learn, understand your strategy, make your own strategy, carve out your own edge into the market, and really make that your own. Because when the trades are coming in and the market is moving and you have different events that are going on around you, you're going to need to fall back on something that you understand, and you can't just be in the market throwing around trades, or you will blow up. Other than thank you very much for the opportunity, this is not the first funded account that I've had with OneUp Trader, but every single time it's always been a pleasurable experience, and I thank you guys for the opportunity. Thank you to OneUp Trader. Thank you to MES Capital for allowing traders like us to really get capital in order for us to express our edges within the market, and we thank you for that.